wherever you're joining us from across the world. I'm honored to welcome you to this event. It's themed Shared Prosperity through Financial Inclusion, Protecting Your Business and Wallet Using Insurance. It is presented, of course, by Coronation Insurance, and my name is Wole Famrewa. I'm delighted to be your host for this enlightening journey into the world of financial inclusion and insurance. So today we have a fantastic lineup of financial services professionals, experts in their field, who will be sharing their knowledge, their insights, and best practices to help you safeguard your business and personal finances. They will also be taking your questions later, so get ready to engage. And our theme today, Shared Prosperity through Financial Inclusion, I think strikes at the heart of what we're here to explore. Financial inclusion is about ensuring that everyone, regardless of their financial status, have access to tools and resources that they need to prosper. So I want you to take a moment to imagine a world where your business is secure, where your family future is also protected, and where you have the peace of mind knowing that your financial well-being is in good hands. That's the world we aim to create here today, and it all starts with knowledge. So our experts will guide you through the maze of financial instruments, but let's not forget the core of what we're doing. We're empowering you to make informed decisions. So let's never forget that. So let's set the tone for today's discussion. And I want you to think about this for a moment. What does prosperity mean to you? It's not just about financial success, I dare say. It's about security to pursue your passions, the freedom to chase your dreams, and the confidence that you and your loved ones are protected. So as we journey through this event, you will discover how insurance can be a fundamental pillar of your financial security, and your participation is highly encouraged. It is okay to ask questions about the complex world of finance and insurance, and we encourage you to do so. And as you do so, please use the Q&A field to type in your questions. So before I invite our host to share some welcome thoughts and to set the tone further, I want to encourage you to just take a moment to type in a small greeting in the chat field to let us know where you're joining us from. And we really believe that you are as excited as we are to get into this very important topic. So on that note, I'd like to now yield this virtual stage to the Managing Director of Coronation Insurance, Mr. Olamide Olojolo, who would be sharing some opening thoughts as we move further. It's over to you, sir.
Thank you very much, Wole. Good afternoon, ladies and gentlemen. My name is Olamide Olojolo. I'm the Managing Director and CEO of Coronation Insurance PLC. I'd first like to express our gratitude to all of you for accepting our invitation and taking time out of your busy schedules to attend this webinar event. At Coronation Insurance, we have initiated Coronation webinars as a thought leadership program aimed at providing insightful and practical guidance to our customers and shareholders. In various sectors of the economy, we are thrilled to have organized these events, and we hope it provides with valuable insights. Like Wole said, the theme of this webinar is Shared Prosperity through Financial Inclusion, Protecting Your Business and Wallet Using Insurance. As we all agree, the cessation of fuel subsidy has had a profound impact on both households and businesses, resulting in diminishing purchasing power and heightened operational risk. So can individuals sustain and enhance their purchasing power through the use of insurance products? These are what we're going to discuss today. Can businesses regard all their physical assets through insurance products, using insurance as a wealth preservation strategy? Well, we'll see at the end of this section. So this section is intended to foster shared prosperity through financial inclusion, emphasizing on how insurance can contribute to economic growth and act as social safety net in Nigeria. The event will also seek to enlighten participants on the cost-saving benefits of insurance through risk mitigation, utilizing case studies to underscore this. It will also emphasize the use of obtaining insurance products and potential for agents, both full-time and part-time, to generate income through insurance. We'll also be conducting an interactive session to safeguard the signals, to discuss the signals of insurance for individuals and business owners. The section will cover different types of insurance offerings available to protect the assets of individuals and businesses. So to address all inquiries or concerns regarding protecting your businesses and household, we have invited a keynote speaker and panelists from prestigious organizations. So we are delighted to introduce Mr. Adedeji Olowe, the founder and CEO of LensSquare, as our keynote speaker for today's event. So he will be discussing the event's theme and how it could impact your businesses and household. Along with Mr. Olowe, we have two distinguished panel speakers, Babatunde Aki-Moses, CEO of Sycamore, and Yemisi Sidi, CEO of Thrift Africa, who are both experienced professionals in their respective fields. So on behalf of Coronation Insurance, thank you once again for taking the time to join this section, and we wish you a wonderful outing today. Thank you very much. Thank you, Wale.
Salajola, thank you so much for setting the tone. And I do believe you have captured essentially what we hope to achieve today. And we look forward to the great insights from our expert speakers. And so, as he mentioned, I would like to now introduce one of our speakers who will be delivering a keynote presentation, but just to give you some insight into how this is likely to flow today. So in a moment, as I mentioned, I will introduce him and he will deliver his keynote presentation. And then after that, we'll move on to a panel conversation where other speakers will be joining to give their perspective on the topic. And then, of course, we're going to open this up to everyone to share your thoughts and questions. So we look forward to that. So let's get started with the keynote presentation. And to deliver that, I'm delighted to introduce the founder and CEO of LensSquare, Mr. Adedeji Olowe, who has over 20 years experience in the financial services industry. He began his career as the head of electronic banking and web management at Access Bank. And over the years, he has held various positions in leading financial institutions, including First City Monument Bank, United Bank for Africa, and Fidelity Bank. In 2018, he founded and became the CEO of LensSquare, the financial technology company. And Adedeji has a background in engineering and business management with a diverse set of certifications, including the Certified Information Technology Professional and Prince 2. So on that note, I would like to now yield the stage again to Adedeji Olowe. It's over to you, sir.
Thanks so much, Wale, for the introduction. And Olamide, good to see you again. So
nice to see you.
Just to put it in perspective, I actually started being the CEO of LensSquare last year, right? Of course, Olamide can correct me with that. I've always been part of the Coronation group. And the interesting thing is, I started my career in Access Bank as well. So everybody can figure out the connection. So I'm so glad to be here to talk about shared prosperity, which is actually the foundation of what Coronation starts with. There's a proverb in Yoruba that, well, I'm going to say it in English, that says, when you are the only rich person within your community, you are really, really a poor person, right? Of course, now, obviously, Nigeria we have a lot to do regarding our economy, right? But then we also have very rich people in Nigeria. After all, the richest Black person in the world is from Nigeria. But does that take away from the fact that Nigeria is not as prosperous as we should be? It doesn't take that away. In fact, that is a problem we all face every single day. So when we start talking about shared prosperity, this is actually critical. How do you get this team, this goodness to go around everybody? When people talk about insurance, all the educated people, everybody here on the panel with me, probably have every single thing that is moving insured. But let's take a step back. One tree doesn't make a forest. So we start asking ourselves, then what is financial inclusion? Because if we want to share prosperity, and we all understand what prosperity means, we understand what wealth means. If you want to share a true financial inclusion, what does it mean? So the first thing is to understand what financial inclusion means. Of course, it's simple English. We could say including everybody within the financial space, but it's more than that. Financial inclusion, right, from an academic point of view, talks about being able to have access to financial services at a cost-effective pricing. So If something is available but it's expensive, it's almost useless. Now, so let's look at Nigeria. 200 million people, and literally about 100 million people are living below poverty line, and this is the reason why it is extremely important to have financial inclusion. But the statistics itself doesn't say it all. Even though we have like more than 50% living below the poverty line, you also discover that about 50% of Nigerians were actually born in the last 20 years. So imagine Nigeria itself actually like a ticking time bomb. You see people that are growing up now who are younger than 20 are going to do what? Grow up in poverty. We don't know. We may think Nigeria has endless resilience. We can always change. We can always absorb all the things the economy is doing for us. Maybe not. We don't know. Now, so which is why this is very important to say, how do we share this prosperity? How do we create wealth? How do we create value for everybody? How do we lift these millions of people from poverty? And that's all what financial inclusion is all about. So when Olamide or everybody in insurance is talking about insurance, right? What does it mean from a financial inclusion point of view? And that's what I'm going to be talking about. We're going to talk about it in a simple way. I'm a storyteller, so I will talk about the story. I'll make it relatable for all of us. So the first thing I'm going to talk about is a life without insurance is on the ropes. And what does this mean? If you don't have insurance, it's like driving without your seatbelt. It's like sleeping without locking your door. You could do it for many days and nothing happens to you. The one time trouble comes, is going to be a disaster, because insurance, what does it do? Insurance helps you to handle the uncertainty. Now, you now ask yourself, then, so what does insurance do for every man? Every man is because insurance is what makes you to continue to be alive when the forces of life come to eat you. People fall ill. Sometimes your car gets bashed in Lagos. Everybody drives like in crazy ways in Lagos. Something is going to bash your car. Even if you are, well, let's talk about financial inclusion by making it to be grounded. If you are a small business owner, if you are an artisan, things happen. People get injured when doing their work. Tools get broken when doing the work. So it means that you need insurance to ensure, right, that you can actually survive any eventuality that can come to you. I can say, while we may say that Nigeria has maybe 95% of Nigerians don't have access to insurance, or they don't insure anything, you can be very sure, literally maybe 99.999%, you can stretch the line as long as you want, of the poor people who are financially excluded and who need this shock absorber even more are the ones that don't have insurance, which means their life is always one disaster, one issue from penury, right? So imagine, like I said, an artisan who damages his goods, or who damages maybe something from somebody he's working with, no professional insurance. It means that while he's trying to struggle to solve that problem, everything in his family will grind to a halt. Probably the wife will be poor as well. You can imagine what happens to them. Sometimes they don't get to survive all those problems. So the truth is, without insurance, you can't build wealth, right? People will think, okay, why? What does that mean? Because what insurance does is to protect your business. It protects your ability to create value. So imagine you are a driver today. Maybe you are driving Uber and you don't have car insurance. It means that if the car should have a problem, maybe the only thing you have is the third party, which is really nothing today because it protects the third party. If you had a problem with the car, it means that during that period, first you first need to find money to fix that car. Now, so it means if it's a major damage and it's going to cost you 500,000, it's going to cost you 1 million. Where do you get that from? Now, it also means while you're scrambling around looking for that money, probably borrowing from people, family, friends, enemies, your ability to earn money during that period is taken away. Now, on the other side, that's for, let's say, Uber driver. On the other side, you'll see a business owner who have something in a shop, maybe goods worth maybe 5 million, 10 million. They don't have any form of burglary insurance. They don't have any form of insurance for, let's say, fire. And then their shop is burgled. The goods are taken away. If they took those goods on credit, right, the person that they took the goods from is going to be on their case. In the Nigeria we live in, it's also possible that person, after chasing them around for a couple of weeks, will send police after them. They will take them to Area F or take them to Yaba. Some of us will understand what I'm talking about. Why they are doing that? They can't sell, they can't make money, they can't even go to their shops, right? So let's imagine that they somehow solve that problem in a couple of months. By the time they get back, all the customers, the clients they care so much about to cultivate over years, those customers have gone somewhere else. Maybe they'll find things cheaper. Maybe they'll find the customer service for somebody else better. So literally, you see that without insurance, right, they have no life. They can't build anything. So the Uber guy, if his car was hit, so let's say it was what do you call it? His insurance is from Coronation, and my own insurance is from Coronation. I'll have with them, see your customer, right? All they need to do is raise insurance claim and get this thing resolved. They can get their claim resolved in a couple of days, get the mechanic or any auto repair shop to fix the car. Maximum of 1 week, they are back on the road. And they're able to take care of their family, they're able to save, they're able to buy the next car, they're able to build wealth, they're able to send their kids to school so that the cycle of poverty ends right there. For the young woman who has a shop, if her shop was burgled, if there was an arson, also she goes back to Coronation. She asks for a claim, they assess the damage, they pay her, and then she can get her life back. Of course, obviously, that person will be shaken, but being shaken, being troubled, is different from being completely destroyed. So basically, insurance actually protects, right, what we call the factor of production. Now, if you're a professional, right, even if you're a young lawyer, even if you're an accountant, you could buy professional indemnity, because truth is, professionals are also human beings. Sometimes they make mistakes. Now, these mistakes can cause a lot of problems. If you're a doctor, trust me, one day, maybe you have an argument on the road. By the time you come back, you could administer some drugs you shouldn't administer, or you don't give advice you could advise. Unfortunately, everybody is human. What professional indemnity does is to protect you. Yes, I made a mistake, but the insurance will come in and undo the damages or claims that can be laid against your business. Without professional indemnity, if you're a consultant or you're in the service industry, you are only as good as the first major mistake you made. After that, the business is completely destroyed. Like I mentioned, without insurance, you can't do what? You can't build wealth. You can't build a sustainable lifestyle. It's like oxygen. You know, a lot of people, we all know, we can hold our breath, right? Maybe for 30 seconds, maybe for record holder for 1 minute. If you held your breath for 5 minutes, for 5 seconds, you are not going to die immediately, right? So people may imagine that, oh, I don't need oxygen to live. But we all know that within 30 seconds, you're probably going to lose your life. Same thing for insurance. Insurance is the oxygen of building wealth. Now, insurance also gives you the foundation to handle risk. And these are the things that lead to opportunities. So for example, if you are a business person and you want to do a major contract, usually sometimes people will ask you to bring what we call APG, Advanced Payment Guarantee. Advanced Payment Guarantee is like insurance that you are going to be able to deliver on your promises, as on the contract, especially when you are going to be given things like some part of the money to start a project. So if, for example, you are a young person that has a business, right? You've been praying, fasting, going to the mountain, coming down into the valley for an opportunity, and then you suddenly find an opportunity to supply or to do a project for a big multinational, a blue chip company. Maybe all your life, the best you've done is 10 million, and suddenly you have a 150 million contract in front of you, and they have to give you 100 million first. Obviously, since they know how Nigeria is, they'll probably ask you to bring an APG. If you don't have that insurance, obviously, you are not going to get that contract. But if you got that insurance, for whatever price that Coronation is going to charge you, you have access to 100 million. You deliver the project well. Maybe you finish the project with 75 million and then you make a 75 million profit. You have built wealth. You have created business wealth for yourself. This is what insurance does, right? So with having this at the back of our mind, right? Then you ask yourself, how is insurance and financial exclusion? How are they related? One thing you will notice is that while we can say causation and correlation are not the same thing, sometimes they are cousins. They hang around with each other. Today, we know fully well that lack of education and financial exclusions, they go hand in hand. It doesn't mean that if you are not educated, you will be what? You will be poor. Neither does it mean that if you are educated, you are going to be rich. But it just happens that those who are not educated also don't make good decisions that end up making them to be poor. Same thing for insurance and financial inclusion. Insurance is part and parcel of financial education. You notice that those who have education, who are educated, they tend to have insurance because they understand what this means for them. Knowledge is power. So insurance and financial inclusion and lack of insurance, they're like two peas in a pod, right? You can be very sure that 100% of those who are financially excluded, they are without insurance. And that's the sad part. That's the thing that makes me sad every day because they are the one that need it the most. If a rich man should lose a car today, he probably has another car in the house. If a financially excluded person who is Uber driver, right, should have an accident with his car, probably that's the only thing he has. In fact, there's a high chance that car doesn't even belong to him. Now, when we talk of financial exclusion, sometimes financial exclusion doesn't mean they don't have bank account. It just may mean that they don't have access or they do not know that they need access to the financial services that they require to build and create a life for them. So in the end, this is what makes poor people to tend to stay in poverty because every time they have a problem, their life is entirely destroyed completely, right? Their kids stop going to school, right? Now, when the kids stop going to school, they probably drop out of school. When the kids drop out of school, the kids will probably not have the skills to live in a modern society, right? And to create life for themselves. So the kids also inherit that cycle of poverty. Can you see? Just not having insurance could kind of hold generations in the prisons of poverty and penury. Yeah. But if insurance is so good, why is it that we don't have them? Now, I've been preaching about insurance. I've been talking about us in the years. Everybody alive is breathing. Why is everybody alive not having insurance, right? Because the first problem is that we are financially illiterate. In fact, let's even leave those who are purely illiterate out. Let's talk about financial literacy. Most of us, even those of us that have gone to school that have little businesses here and there, we are illiterate when it comes to financial services. We don't know how to create wealth. We just know, oh, I can put my money in the bank. We complain that the savings accounts provide little yield, but we don't know financial services. Most of us, we just have the customary third-party insurance on our cars. You know, I was reading something from online recently when somebody was saying with the kind of economy we have today, best if you respect yourself, just make sure you have comprehensive insurance on whatever asset you have, because if anything should happen to it, the cost of replacement is out of this world. Now, that is financial literacy, right? So we are not literate. And once you are ignorant, right, every bad thing will start happening to you. The next thing is that our upbringing, right, makes it hard for us to plan for mishap. You know, we don't plan a lot. Maybe, I don't know whether it's culture. I'm not a very spiritual person, so I don't know whether it's a cause, but some people may think it's a cause, right? But we don't plan for anything. We don't plan for mishap. We don't plan for uncertainties. And, you know, we have these scientists that work in insurance. They call the actuaries. They have very good model, right, of knowing what will happen to anybody. They know who could have an accident. They know who could break a leg. They know who could get robbed. So basically, some of this life mishap are certain in a way, even when we don't know they will happen. As long as you drive in the streets of Lagos, one idiot is always going to hit your car, right? Somebody is always going to jump across the road. Security in Nigeria is very poor. So one day, it is always possible that somebody will rob your property or rob your shop or rob your business, right? Now, if we don't plan for these uncertainties, thinking that, oh, nothing's going to happen to me, it's only going to happen to the bad people, then it means that I don't need an insurance. Why am I taking an insurance when I'm so sure nothing bad is going to happen to me, right? I'm also going to talk about something touchy, right? Like I said, so please, if anybody wants to throw spears at me, please don't. You can, which is, I will talk about religion. Religion doesn't help insurance, and is a elephant in the room, right? Because we all believe that God will help us. So if God will help us, it means that why am I worrying myself? Like, after all, when I was younger, my dad was solving my problem, my mom was solving my problem. I didn't need to bother about earning a living until I became an adult and they threw me out of the house. So basically, it goes into help. Now, but then, for those who are Christians, they'll say faith without work is dead. You literally have to show that God is on your side. You need to get insurance for that thing you pray for, and there you go, right? And sometimes, now I'm not talking about Olamide or Coronation right now. Sometimes a few bad ones have shown people Shege Pro Max, which is basically you bought an insurance for real, and then you thought the insurance would be there, and then something didn't happen. Now, unfortunately, this is actually very rare, but we know bad news travel faster. If one person in a million should die somewhere, that story becomes like what we used to define everything. All my life, insurance people have always come to my head, which is the reason why I insure everything I can insure as well, from health down to even things at home, laptops, home, cars, everything, because I know insurance have always been there for me. And I also know fully well that if you're an insurer and people know that you don't pay your claims, your business is going to be destroyed. Insurance companies have every incentive to make sure that trust in their business is not taken away. But some of these stories are being told in such a way to make it look like that is what insurance is all about. Maybe this could happen, but probably one in a million. Maybe sometimes people also don't understand how to handle insurance. You don't know fully well the process for filing a claim, the evidences you have to show, and you also have to show that you are not culpable. If you are drunk and then you have an accident, it's not on the insurance, right? Because you have gone to look for trouble by yourself. If you have a house and you have fire insurance, but you don't have fire extinguisher, you don't do the right thing, you are cooking right in the kitchen, you are cooking right in the sitting room, you have flammables, in the house you burn down, which is natural, you are not going to get compensated. But usually when these stories are told, the blames are placed on insurance companies as well. And then unfortunately, the insurance company a lot of times are not able to come defend themselves. Then you also ask that one of the reasons why we don't have insurance is that in Nigerian law, there are about 6 insurance categories that are supposed to be compulsory. I don't know this, I know some of them, I don't know all, right? So I will mention some to just make sure that if this insurance are actually being enforced by government, everybody will be aware of it. So today, everybody knows you have to put on the seatbelt. The reason being that if FRSC should have caught you, you'll probably be in trouble. Now, if FRSC wasn't doing that, everybody would think seatbelts were just decorations on the car. Now, there are tons of things in the car that we don't even use because nobody enforced them. In terms of insurance, I know fully well that there's supposed to be something we call group insurance. So if you are a company or if you work in a company, your company is supposed to have insurance for you. We have insurance for when you are building a house, right? You're supposed to insure everything that's happening there. There are insurance for businesses. There are about 6, but because look, I consume my own insurance, but the experts are the Coronation people. If the government is also driving the compulsion, because it's in law and it's supposed to be done. If government is enforcing this and there are consequences, people will have bought insurance and they will have seen insurance work, because after all, if I paid for insurance and something bad happened to me, even when I'm not paying insurance, I'm looking is going to solve part of my problem. If I pay for insurance, definitely I will call on the insurance for claims. So it means that if this have been made compulsory, there have been more claims, but people who have seen insurance come to the aid of people that get into trouble, and then people will learn and understand that, oh, Mr. A got into trouble yesterday and insurance rescued him. Auntie B got into trouble 2 days ago, insurance rescued her. Then maybe insurance will rescue me in the future when I finally get into my own trouble. But then, look, insurance, we can sit here and continue to argue about why insurance hasn't gotten everywhere. why it hasn't helped everyone to build wealth. Because if insurance is so good, then why is it not everywhere? So it means that everybody has to change the narratives, right? The insurers, right, starting with Coronation, will continue to have to change this narrative, especially for the financially excluded. The first thing I would say is that we have to show and not tell. So Nigerian, because we are religious people, we love to preach and judge. I preach a lot and I judge a lot. Apologies, I'm a Nigerian as well. But the truth is we have to step away from that. We have to start showing and not preaching, which means we don't go about blaming people and showing them how stupid they are not having insurance. Instead, we should show them why insurance is actually the best thing, right, that they could have in their life. And we have to show them with empathy. We have to show them with commitment, and we have to show them consistently. Some of us are marketers, we know fully well that there is something called top of mind awareness. This story has to be told over and over and over again. And storytelling is better than talking to people. We have to, whether it's going to be skits, whether it's going to be some story, we just have to tell the story how insurance comes to them. And then we also have to embed insurance into the everyday life of these people, because the friction for getting insurance can be quite high, which means if the friction is high, I'm basically going to dump it. Now, embedding insurance, this is where technology comes in, right? A lot of time, I don't like to talk about tech because I'm so much into tech, it gets in the way of everybody. But then tech is life, right? This is where tech comes in. How do we embed insurance into the everyday of life? And how do we also go ahead and call it sachetizing insurance? So, of course, sachetizing is a term we use in Nigeria where the bulk things are so expensive, we have to break it down. How do, instead of telling somebody to buy 1 year insurance all at once and he has to go and borrow money from Sycamore to do so, can he buy insurance on a weekly basis? Can he buy on a daily basis? Can he buy when he wants to just go on that dangerous journey? But the day he's going to sit at home, he could just stay at home and not buy anything. That helps everybody. And then we also have to enlist powerful storytellers. In Nigeria today, we're listening, in fact, not Nigeria, all over the world, we're listening to certain leaders who are not politicians. So we have politicians that come in and go every 4 years, 8 years, but people have leaders who have moral, moral hold on them in more powerful ways than politicians can ever imagine. We're talking about pastors, imams, political leaders, who can help to tell these stories. Because the reality is that we need to convince pastors and imams that insurance is not competing against God, but insurance is aiding the work of God by ensuring that the things that, instead of them spending more time just praying against bad things from happening, which will still happen anyway, insurance can help those in church, those in mosque, to live a better life. And then we can use technology as a driver, which helps with all these things, from storytelling, from even enlisting those who are speaking. Then we have to find a way. Everyone's to his own, right? You know, like I mentioned, if I press my nose this way, I'm probably be dead in a minute. We all need insurance. That one is given. Unless only dead don't need insurance. Every living thing, including dogs, need insurance to be alive. So, but no, we don't all need everything. So individuals, for example, we use insurance for health protection. Businesses need insurance more than anything else. They need it for like professional indemnity. They need it to protect assets. When moving goods, if I bought yam, right, in Benue and I'm shipping to Lagos, we know what's on the road. Protecting that goods in transit with insurance is the best thing for me, because God forbid, if a truck should have accident and burn and turn turn the entire yam to do, at least I get insurance to cover me. If they should have robbery, I have an insurance to cover me, right? So businesses actually need insurance more than anything else. In fact, their ability to create wealth and grow depends on them. Now, so insurance will help you to protect your business and to grow. So without insurance, there can't be financial inclusion at all in any way, because without insurance helping people to grow, they can't come into that fold of financial inclusion that creates wealth, prosperity, and help with life. Insurance provides assurance of business continuity. Without insurance, you are not sure if the business you have that is booming right now is going to be available next year. right? Without insurance, that assurance is zero. In actual fact, I would say that if I'm going to deal with someone and they're going to help me run part of my business for maybe long-term contracts and they don't have insurance, I don't think we want to deal with them, because it means that they may not be there if something bad happens to them. And so bad things happen everywhere, not just in Nigeria, all over the world, right? Insurance provide the assurance of the preservation of factors of labor. So I'm a company, I have Uber, I have Trickers. Those are my factors of labor. If they should get damaged without insurance, I'm out of business, right? If I'm an artisan and I have tools to use to cut ties, to paint houses, if those things should get damaged and I don't have insurance to replace them, I'm out of business. And those things are so expensive to replace right now, I'll be an idiot not to have insurance for them. So insurance provides the assurance preservation of the factors of labor. Of course, having HMO for your staff means that when they are ill, let's say they have typhoid, water is dirty in Nigeria, they have typhoid, they have malaria, they can, in like a couple of days, they've gone to the hospital, they are fine, they are back. But if they don't have an HMO, it means that when they are ill, they are pretending that they are not ill. They're already worried about how to take care of themselves. And when they don't take care of themselves and it finally grabs hold of them, they're out of commission. Many of them will lose their life. That means even from a human capacity, mental capacity point of view, insurance ensures that you have that. Now, finally, insurance provides assurance preservation of accumulated wealth, right? It means that after you work for years, for months, you've done that job. With insurance, you can protect yourself, because without insurance, one single disaster can wipe the complete wealth you've ever created in your life. So this is my keynote, and this is my thoughts, right, about how to have shared prosperity and create a sustainable business and life, and to do financial inclusion. Without insurance, you can't do any of it. Thanks so much for the time. Back to you, Wally.
Thank you very much, Deji, for that very comprehensive review of the very important topic that I think must resonate with everyone in one way or the other. I was taking notes, and I look forward to us unpacking it even further when we move into the panel conversation. Thank you so much for that. And again, I want to remind all our participants that please, if you do have questions or comments regarding anything you've heard from Deji just now, and of course, as we go into the panel session, if you do have questions or comments as well, please type them into the Q&A field, and we'll be very happy to take them then. So we'll now move on to the panel session. And I'd like to invite two other speakers who will be joining Deji to unpack this topic further. I'm starting with Babatunde Akimoses. He is the CEO of Sycamore. Babatunde is the founder of Sycamore, a P2P lending platform committed to creating a seamless lending process by connecting users directly with peers. Babatunde's professional journey began in 2010, and he gained experience in business analysis and tax consulting roles at various organizations, including Shell Nigeria, KPMG, and PwC. In 2019, he founded Sycamore, and his startup has played a vital role in the peer-to-peer lending segment in Nigeria. Babatunde holds an MBA from the Lagos Business School and serves on the board of Profiliant Development Resources, a B2B sales and marketing consultancy. Babatunde, it's a pleasure to have you join us.
Thank you very much, Wally. It's a pleasure to be here.
We also have joining us for this panel session, Yemisi Sidi. Yemisi is the co-founder and chief executive officer of Thrift Africa. It's a company that supports business growth by providing advisory services, resources, business and financial planning, microloans, and other tools. Yemisi is a business strategist and consultant with expertise in various areas, including business growth, community development, tech for social good, and youth opportunities in education, employability, and enterprise. She has worked in both public and private organizations, including direct sectors in Nigeria and the UK. Yemisi is a prominent figure working at the intersection of finance, business growth, and community development. Yemisi, it's a pleasure to have you join us as well.
Thank you. The pleasure to be here.
All right, so let's get started. I have the pleasure of moderating this session. So I will be posing the first set of questions. As I mentioned, as I continue, I would like all our participants to also type in their questions, chime in with your comments, and we'll be very happy to take them. All right, so I think I will start with you, Baba, today. Perhaps you can give us some context, especially in terms of your business, Sycamore. How has it contributed so that we can better appreciate what you do and also tie this to the topic of financial inclusion? How has it contributed to the protection of businesses and individuals through its financial services? And what impact has this had on financial inclusion? So give us some perspective on that as we begin.
All right, thank you, Wale. Thanks for having me on the webinar. And it's a pleasure to see some of my others like Deji and the call. So so Sycamore is a peer-to-peer lending platform. What we do is we connect lenders to borrowers. And really, one of the key segments we focus on is really empowering SMEs, right, and small businesses and individuals as well. And in terms of some of the contributions we've made, right, we can look at it from two perspectives, which is really the work that we do itself. We like to think about it more like economic empowerment, right? Beyond just financial inclusion and financial empowerment. And just like Adedeji alluded to in his own presentation, there are so many aspects of finance beyond even what we do, beyond loans, beyond savings, beyond payments. A part that is often neglected, which is a key part of what we contribute, is also financial education, right? Because you need things like financial education and financial literacy to bridge that gap between just giving people access to loans and letting them know about things like insurance, things like pension, about earning money, about budgeting. So people need to actually be educated, which is why a very core part of what we do, even if we don't necessarily charge for that, is looking at financial education. And for the platform itself, for lending and borrowing, and which maybe I'll talk about later, if people are borrowing, sometimes they need to securitize, they need to collateralize some of their loans, right? And usually we collateralize against assets. Now, if those assets are not insured, then you're already in trouble, right? So that already limits your ability to create more wealth. And a lot of times, even us in our business, if you want to collateralize something, we would ensure that you already have it insured. And that already gives you a benefit to even access more money and then grow your wealth. So I'll say, that's some of the ways we've helped out. So thank you very much.
Thank you very much. Very valuable insights there. I'll go to Yemisi now and perhaps ask a similar question. In your experience at Thrift, how has financial services played a role in promoting shared prosperity?
Okay, thank you so much. I absolutely enjoyed Mr. Deji's session, actually. And like you, I was making a lot of notes, and he really provided a lot of insights on insurance. So thank you so much for that session. So at Thrift Africa, one of our missions is to help micro businesses to start and grow. And one of the ways that we achieve this is through micro savings tool, micro loans, community support, business services and resources that kind of bridge the literacy gap that we typically see with people trying to build businesses. So the answer to this question kind of ties to the root of why I actually started Thrift Africa. So I was thinking of something to do when I moved back to Nigeria, and I stumbled on data that showed that we currently have over 40 million micro and small businesses. And these people provide 84% of the jobs that we have in the country and almost 50% of the country's GDP. However, according to the research that I saw, less than 4% had access to finance. And about over 50% of the Nigerian adult population is not banked. And one of the problems with this, so when there is this significant unavailability of financial services, or if they're unable to access financial services or finance to grow their business. What does this mean? Especially when they actually account for 84% of jobs. So this means that these businesses would experience very limited growth. Though, and if they experience limited growth, or it also points to the fact that a lot of our micro and small businesses are not doing as well as they can be doing. And if they're not doing as well as they can be doing, it means they are probably not providing as much jobs as they should. So even at 84%, that means that if we support the micro and small business sectors with the right financial service and the right financial support and access to finance to grow their business, we can see improved local communities. We can see more jobs being created if we provide them with things like insurance, that I call insurance pay now, save later, because that's pretty much what it is. You make the payment now, and then at the point when you need the service, you realize that you're saving a whole lot of money and a whole lot of time. But I'm sure we'll come to that later, right? When they have access to the right communities to support their growth, they have access to financial literacy through events like this as well. We find that businesses are better empowered to solve some of the issues in their local communities, especially job creation. And this is something that we've seen even in terms of the customers that we've served and in the underserved communities that we've gone to as well. So what we've done is sort of improve the popular Agile system and cooperative system. And so local traders, underserved micro and small business owners now have the opportunity to save, whether or not they have access to a smartphone, be a part of a business community, access support and access funding that they need to grow.
Sounds great, and correlations on the impact you're making so far. Let me go back to Deji now. And as you tell us a bit about LearnSquare, my question is if you can just perhaps use some specific success stories or projects where LearnSquare has effectively facilitated financial inclusion through insurance and other financial services. And perhaps you can also speak to the key outcomes and impacts of these projects.
Yeah, thanks so much. So this is what we do at LearnSquare. We're like, we call ourselves the Shopify for learning, right? So you have today on the call, you have so many people who wants to build businesses, right? We all know fully well that one of the fastest way for financial inclusion is access to credit, right? But it's one thing to know that you want to have access to credit. It's another thing to have the technology to be able to build. Now, today is smart. It's a different breed from most of us. So you can build this tech, but most people can't do this. So imagine if you were a business, even if you were smart, you may not have the time, you may not have the resources. Now, this is where LearnSquare comes in. All of us were on this call right now. We are using Zoom. When I started my career, probably Olamide and Wale, you guys will know this. In those days, only big CEOs, maybe top 5 banks in those days have access to teleconferencing. So you go to the boardroom. Now, look at what Zoom is doing. By making it available, we're speaking to tons and tons of people all over the world at a lower cost. Businesses have changed and evolved because of this kind of technology. That's the same thing we're doing with lending as well. By making sophisticated technology that used to cost millions of dollars available for people, for lenders at a fraction of the cost, we honestly believe that credit will get to most Nigerians and Africans, and then there will be financial inclusion. And one of the things we tell lenders that they understand right now is that when you're giving credit to people, better make sure you ensure the underlying human being or the asset that is backing the credit. So today, I'm not sure whether Coronation does this or not, but normally job protection insurance is a standard for payday loan. So if I'm taking a payday loan, I need to ensure that I have insurance to cover that, because if I could lose my job suddenly or something bad happens or it has to do with that, then it means that the lender as and I'm very sure I can see Tunde nodding, because probably those are some of these must do for anybody. If I'm financing maybe goods and services, you absolutely must have insurance for goods in transit, because bad things happen to goods on the road. If you're a consultant and I'm giving you a loan to service a company, you must have professional indemnity, because if you misbehave, you could lose that entire money, right? So insurance and lending and credit, they are so tied together that you literally cannot separate them. Any lender today that doesn't demand insurance from key lending that they do, they are playing with fire. So this is where we come in. We don't do specific insurance product, but we make the entire technology available for lenders and insurance to interplay and meet the requirements that are needed to create successful credit loan business.
Thank you very much for sharing that. And, you know, as you spoke to the point about job protection, it really made me think about the realities of our day, which perhaps some people are, should I say, struggling to appreciate more and more. And perhaps one of our panelists can speak to this. And you mentioned that to access loans right now, typically there will be a need for either the entity or the individual to provide to be insured. So what that's essentially is telling me is that your access actually to credit is now predicated on insurance. So if you thought that you could access credit just by simply calling the
insurance, about 2 years ago, or 3 years ago, I had gotten health insurance, life insurance as well. And it covered, childbirth and all of that. And so about 2 years ago, I had my son, and we had, how you already planned how things would go. We got to the hospital, and then it led to an emergency. So we had to have surgery, and it was a very expensive hospital. So someone asked the question, and I think we'll come to that later, about why do you buy insurance when you can just be saving the money? The thing is that this kind of emergency is not something that even crossed my mind or you're prepared for. And I was already thinking about the amount of money we would need to pay. And it wasn't like we couldn't afford to pay it. It was just out of the blue. So imagine a sole proprietor now who has a health emergency or a fire outbreak. Yes, you've been saving money and putting money aside, but that's money that could have gone on to something else that would really expand your business. But now you have insurance. And so they brought the bill, and it was way into its 7 figures. And I was just thinking in my head, my goodness, I wasn't prepared for this. And then when it was time to make payments, we went to them and they said, "Oh no, you have insurance, it's already covered." Oh my goodness. So since then, whenever I'm speaking to anybody, especially newlyweds, people just starting off their business, especially businesses that are asset heavy, I would always recommend insurance, because imagine, as a sole proprietor, now the money that is supposed to perhaps go into your business, go into paying staff, you're now using it to fund personal health emergencies or business emergencies that were not planned for. Yeah, so I just wanted to share that as well.
Thank you so much, EMC, for sharing that personal story, which I think makes it even more impactful, because it happens to somebody that people can relate with. And again, it really brings up that urgency for people to appreciate the change in mindset that is required to actually live in, should I say, today's society. Because as you mentioned, one alternative is for, as the question suggested, for me to be saving up for emergencies. And of course, the alternative is to actually buy insurance such that whenever those emergencies crystallize, then you are not left stranded, you're not left. And in fact, who knows, the savings perhaps will not be adequate to cover that emergency. So thank you so much for sharing that. I was going to go to that question, but I think we've touched it to a large extent now. But let me now perhaps go back to Babatunde, and maybe you can now begin to bring this home in the context of a business, a small business. She has spoken to why health insurance, for example, is important. But let's speak to the risk associated with businesses that you have seen, where the case for insurance is so glaring that perhaps people are not paying close enough attention to.
Okay, that's very, I like that you came there. So if you are dealing with very small businesses, a lot of times you're talking about buying and selling, right? And when when goods are involved, sometimes obviously there might be inventory and there might be goods in transit, right? So you just, to add to what Deji had said before, and we've seen this in practice where when we had really small ticket loans for businesses, say 100,000 naira, even 50,000 naira, right? And the only people that could get access to that are the people that have actually even insured their own inventory, right? For different types of insurance. So for goods in transit, for your business premises, and all the other hazards, right? So even access, you already limit your access when you don't have insurance on your goods, because even both the fintech lenders, the microfinance banks, they won't even want to deal with you, and that is your only asset since you don't have property, right? When people think of assets, it's not only about your property or your Benz, like like big man, if you're a big man like Wale, for example, or something, right? There's for the small guys, it's just the goods in their shop, and that can't be insured as well, right? And just to add to something you said, aside from even access, even if some financial services will deal with you without insurance, you are just going to increase the premium because you're more risky now, right? So if somebody could have given you a loan at 5%, they'll say, "Oh, this guy doesn't have insurance. Okay, we'll still deal, but maybe we'll charge you double or triple." So even when you have access, because you've not done insurance, you are just making yourself more risky. And the riskier you are, the higher the premium, or the higher you even be charged, because sometimes they might even want you to decline, or if they're going to deal with you, the cost of serving you is higher. So they'll price that into the cost of providing whatever service to you. So I think it just matters, whether from an individual perspective or as a small business. Thank you.
You're muted.
My apologies. Yes, thank you so much for sharing that. Again, I hope that is a message that resonates with business owners who are on the webinar. It actually reduces the cost of you accessing financial services when you actually are insured. Beyond the protection that it's buying you, so to speak, for the eventualities, it's also actually reducing the cost of you accessing this services. So I want to go back to Deji now. Perhaps Deji, maybe we can begin to drill down a little bit. Thank you again for the very excellent presentation. But can you just begin to explain the different types of insurance that are available to individuals and businesses, and the specific benefits they provide beyond what we have, of course, discussed so far for financial stability, and to also take us to that point of shared prosperity? And while you speak to perhaps the small to medium-sized businesses as well, to the medium-sized businesses, I would like you to also speak to the small businesses, which I think, as you've rightly pointed out, from what we've seen with the trends, they are the ones that actually need the protection the most. But it seems like more so because of the view of affordability, there's a sense that they are not the ones actually buying that protection.
Thanks so much. Right. For as far as insurance is concerned, literally, as an individual or as a business, there's an insurance for everything. Anything that can cause trouble from losses has to be insured. So let's start with health. Health is the number one thing, because as an individual, your ability to live a good life or to be creative or to be productive is based on health. So never play with HMO. Now, HMO, for example, which is health insurance for yourself, covers from, you could have even something small is fine, up to something big. And you could, depending on the kind of trouble that you expect could come, that depends on the size of what to sign up for. Some insurance just, HMO may handle malaria, typhoid, the common things. But for people, as people get older, then you probably have to look at something bigger, right? And as Yemisi mentioned, if you are a family, you really want to cover everything. Kids have this interesting way of getting into trouble, touching what they shouldn't touch, falling into what they shouldn't fall into. Now, that's it. Because even if you are not the one that is falling ill, if you're a very productive man or woman, nothing happened to you, but your family is ill, you can't work. your ability to be productive becomes impaired. So that health insurance, we should not play with it. Now, if you have a car, right, obviously you go out, third party is compulsory. I think the market just jack up the prices today. But third party basically just means your car goes to damage somebody else. You hit somebody else, you aren't paying attention, you hit somebody at the back, you broke somebody's fence, you eat somebody carrying egg. Third party handles that. But then you also need comprehensive insurance for the car. And if your insurance allows you, you could do what they call SS buyback, which means you don't even need to contribute a portion when a claim should happen. And don't make the mistake of under-insuring yourself as well, because you can't pay beyond normal. Then you have home insurance as well. You want anything happen at home. There's burglary, there is fire. Sometimes you have damages, your TV, these days sometimes EKDC might just want to bless you with extra voltage and fire things up, right? You need money to cover those things. Now, your charger could spoil. Maybe you could get that back with 50K, for example. But if you have an expensive TV or have sensitive equipment, it can be quite expensive to replace them in this economy. So having an insurance that covers all that is fine. Now, that will be, for example, the common insurance you could have. Now, if you're a business professional, right, even though it's not for business, right, if you are like a lawyer and the rest and a doctor, because as a consultant that gives what they call professional advisory, or what you say or what you do is what people pay for, then usually you have indemnity insurance as well to protect you. So if you should mistakenly mess up, maybe when your child was ill, you mistakenly gave somebody a wrong advice, that by your code of conduct in where your professional group, you are not supposed to do, this insurance will always come to your aid. And it happens because human beings. There will always be a time when you will not come with your A game and do something stupid. This insurance will cover you. Then you have, as a business, this is now where it gets interesting, right? So first and foremost, your premises, you need insurance for it, right? It can be burgled, fire can happen, water can damage it, right? You have that. If you are the type that ship things all over the place, obviously you need to have goods in transit. Like we all know, bad things happen to goods in transit in Nigeria. Even outside Nigeria, bad things happen to goods in transit, right? If you have a car, obviously company car, you have to protect them. You need group insurance for your staff, right? In terms of HMO as well, because you know what? You may think, oh, if they are smart, they should be able to work. If your staff are good, smart staff doing very well, and they fall ill, you will mess up on your ability to deliver as a company. You might even get into trouble that will force you to call on those professional indemnity because your staff did something stupid or they were ill and they weren't there. And of course, if you have business premises where you're a contractor building a house, you have to protect that place as well, because sometimes laborers will fall off, break a leg. Then you could actually just make sure they are covered. Yes, they are not part of they are just artisans, but you need to make sure they are there as well. And then if you're also going to do contracts where people give you maybe disbursement before you start, maybe give you money before you start, 60%, 40% advance payment, you probably will need, if you're working for a blue chip company, you probably need what they call the advance payment guarantee. If not, you have to go and do the business by yourself. Now, of course, obviously, when you have been praying for that breakthrough, trust me, you will. If it's a breakthrough, the money you have will never be enough to actually implement a breakthrough project without having to tap into loans. And even having insurance also means that you are able to talk to reputable lenders, because when you have insurance, you can talk to banks. Their rates are cheaper, right? You can talk to Tunde. His rate is reasonable. But when you don't have insurance, you may be forced to borrow money from people you should never borrow money from. That could be the beginning of trouble for so many people. So these are the kind of insurance you really want to have. Now, that doesn't cover 100% of everything. Things will still happen, but at least you will minimize your risk significantly, and your ability to survive when eventuality comes, right, is going to be significantly improved.
Thank you very much. I really want us to just echo that last point you made, that insurance is not necessarily always about eliminating risk, but minimizing the risk, because that does you a huge favor when you are dealing with the various vicissitudes of life and you are dealing with one challenge and then, excuse me, and then another one comes up. At least if insurance is able to manage that for you, then you're not necessarily as distracted as you potentially would be if you didn't have insurance. So I think it's so important for people to appreciate that. I'm going to be taking questions from the audience very soon, but I just want to, and I want to again encourage people who are on the call. I imagine that the messages that are being discussed here must be resonating with you one way or the other, especially if you have not, you haven't purchased insurance for a lot of the risks that you're exposed to. I have no doubt that many on the call today should be buying more insurance. But of course, the big question is, why should I take that out of my pocket? What are the, how can I make that happen? Hopefully we can get to some of those practical questions later. But before that, I just wanted to touch another question. This time I'll go back to Tunde. So you guys obviously are using technology to drive a lot of things you're doing. So I wanted you to just maybe speak a little bit to the impact of digital platforms and technology in making insurance and financial products more accessible to the wider audience today. Can you just speak to the trends that we're seeing and the kind of information that people who are joining the call today should be aware of, given the ease that technology is bringing to the process?
Yeah, thanks for that. I think there is a lot of, I think technology has really advanced in terms of how we can access these things, right? And I think the fact that, as they just said, we're having this conversation now. So that means the education is even, what we're doing is part of financial education, which we have tens of people here. So that information, a lot of people we are getting from the comfort of our homes, and it's letting us know more about insurance. I think a few years ago would have had to be sitting somewhere that Coronation would have paid for. At least there would have been that would have had to be physical. So there's that for communication, but even for access, right? There are so many channels now. Virtually, the average person has a mobile phone, right? So a lot of insurance services now, I'm really impressed with how far the insurance companies have gone in terms of making sure that you can access almost every service that you need. My health insurance, for example, is coordinated directly from my app. I visit a hospital, I get a notification of what I've done and what has happened. And as people are even taking it as far as making services available directly on their website. So there are apps if you don't want to use your smartphone directly. And I think even a few, the more, should I say, maybe more, a lot more innovative guys are even making some available through things like USSD, right? Where even if you don't have a smartphone, there is no excuse. Now that has its cost implication, and that's for probably the sachetized services, right? Like Deji said, where you want to access smaller services on the go. So I think, in terms of information, technology has helped bridge that gap. And in terms of access now, so there's no excuse that, it's because I didn't have transport money to go to Coronation's office. That's why I couldn't access this insurance for my business. You can, sit down from the comfort of your house or your office, and you could access whatever insurance or financial service that you need. Thank you, Wally.
Thank you very much. And clearly, the opportunities are enormous now with technology and the ease as well that it has brought. And perhaps we'll be hearing more about this as we go along. I'd like to now begin to take some of the questions that have come through. Maybe starting with one that was typed in the chat field. It's and again, I want to remind our participants to please type in your questions in the Q&A field so they don't get lost in the chat field. And the first one I would like to speak to now is the current preponderance of lending businesses in Nigeria seems to be focused on short-term extremely high interest rates, cocooned as daily or weekly interest. What are your takes on this? Are we helping or worsening the financial position of the people we are meant to be helping? So this is a reflection on the state of how the cost of borrowing right now, and given the way many people have commercialized the process, is it really a reflection of the risk that they are taking? I wonder if anyone would like to speak to that comment.
I think I can take that.
Sure.
See, the truth is, lending is an economic game, right? So why is it that people are doing a lot of short-term lending as against long-term? Because you don't know what the value of your money you are giving out today is going to be in a year's time. If I gave you $1 million a year ago, that was probably something around almost $2,000, right? What is it today? Recently online, somebody was screaming about in 2002, his dad bought equities of about $1 million, right? And at that time, 2002, maybe dollar was roughly around 100. That would have been $10,000. Today, those equities are down. The entire equity itself went down to about, I think, maybe 11,000 or something like that, right? But even dollar is now 8,000 Naira plus. So that thing is down to $10,000 to like 10. So when there's economy uncertainty, nobody lends for long because lenders also get money from somewhere, right? And they have to pay back. So as long as the economy is in a poor shape, it's always going to be short term. But nevertheless, you can also still build wealth even within a short term. You can trade, but you probably can't take that money to build a house. You can make sure that factors of productions are dealt with. You took a loan, service a customer, payback. Today, trade financing, even locally, trading, taking money, buying and paying back has been the foundation of many of the wealth that have been created. So if a serious person, even market women today, actually take money from a large job, from cooperative. Sometimes they will take 2 months money and then they pay back every day over 2 months because they use that bulk money to buy something from central market and start selling. As long as, even if it's short, it can do a whole lot. If it's a payday loan, you still need to buy something, you take a payday loan and pay back next month. So I wish we could give longer term, but I don't know any lender in Nigeria today who understand any shred of economics that can do loans probably longer than 6 to 9 months. It will destroy their financial.
All right, so thank you for helping us appreciate the reasons why the markets are the way they are. We know the macro situation is very, very challenging, and it also reflects in the way even financial service providers do business. However, some will still argue that perhaps it's more of a commercial engagement, and those rates do not necessarily have to be that high, but I guess it's neither here nor there. All right, let's take another question. What will happen if one applies for insurance or one insures his business and property, but eventually nothing happens to one's business or the property in the end? So someone is thinking, look, I am spending this money, but nothing is happening. I feel like it's just coming out of my pocket. MC, I see you've already unmuted. Just please tell us, react.
So some insurance companies provide payback. So if you end up not using a certain amount of your insurance within a period of time, you get your money back. But apart from that, when I saw that question, the first thing that came to my head was, so I have a friend who would always say, why are you always saving money? Or why are you doing all these courses? What if you die tomorrow? What if you don't die? So you're saying, what if nothing happens? And that's a valid, so you're thinking, oh, I'm just putting money aside and nothing happens. That's very valid. But those are variables that are almost not in your control. Okay, and like I said, you can always look into the terms and conditions of the insurance company that you're working with, and they'll be in the best position to offer support in that regard. But I don't ever think that an insurance is a waste or it's something, or is you losing money.
Thank you very much. It really is an investment, and it's an orientation thing for people to appreciate that, yes, you are taking you're taking some money out of your pocket, but you are actually buying a service. Now, the issue is that people feel like, okay, so I mean, the risk didn't crystallize, so why should I continue? But what if it does crystallize? So I guess that is the reorientation that we need. Okay. we have another question here. The speakers should also speak to leveraging insurance to build wealth through life insurance products, i.e. life insurance, term assurance, endowments, deferred annuities. So let us talk a bit to the investment side of, in a practical way, the investment side of insurance. I wonder if any of our panelists would like to speak to this.
I could take a start, but the answer I will give, I don't know whether Olamide will toss me out of this panel, right? So when I left, so for example, when I left Coronation early last year, I think I checked my pension. Then I was dragging my pension to say, can you guys invest in dollars, right? The truth is, long-term investing in Nigeria is very difficult. And I feel very sad for people that have worked for long and put money in pension, because pension, annuity, they're all cousins. You know, long-term investment that is supposed to grow. You know, the rates are never really like out of this world. But you know, if you get something at 7%, which is where I asked my pension company to move my investment to the more riskier bucket of 7%. Over 10 years, it will double, right? And I still I won't be tapping it. I'm not supposed to tap it until like I have more grade than this. But guess what happened, right? Inflation and poor economy literally destroy everything. And this is where I'm not going to lie. Unless you're doing maybe Euro bonds or FX denominated something, it's difficult to tell people to do long-term investments in Naira, because it's difficult. And I'm not going to come here and tell people what I know I will not do for myself, right? So maybe we should be asking, maybe I'm going back to now ask questions and giving answers to say, in the face of this reality, how will long-term investment denominated in Naira, right, for insurance will play out, right? I'll be glad to know more.
Sure. Yes, thank you very much for taking that stab at it. And in my mind, you've certainly raised a very important issue that I think has really begun to come to the surface, and that is just the macro instability that we have seen over the last, say, 3 to 4 years in Nigeria. I think prior to that, yes, we have seen instability, but perhaps nothing like what we have seen recently, especially with the currency, inflation, and so forth. And perhaps prior to the last 3 or 4 years, Naira-denominated investments, I think many people would say were working for them. And many people were investing in commercial real estate, residential real estate. They were putting their money in bank deposits, and they were getting above inflation returns. But now a lot of things have changed. But I can see that, Olamide, perhaps it's a good time for you to maybe say a few things about what we've been discussing up to this point.
Thanks, Wally. I think I'll take from the last question. I think it was something about when people pay for insurance, what did they get back in return when nothing happens? You know, that's the question since I started my career, I've been hearing all the while. And I always use a simple analogy that you engage a watchman to guard the house until probably throughout the year, no robbers come to your house. At the end of the day, are you going to ask for the guy to pay back his salary? Of course not. So insurance is more about law of large numbers. So we have a lot of people contributing to a pool. Let's say 1,000 contributing to a pool. Probably about 5 will suffer misfortune. So you pay for the misfortune of the few from the pool. So that's why I said insurance is more like a social safety net.
Yeah.
You know, I mean, everybody will contribute to that pool. Then when people suffer misfortune, your insurance will come in and pay. Then secondly, people are buying peace of mind. Like what did, I mean, in fact, we just spoken extensively about insurance, even more than an insurance practitioner said, all those benefits of insurance. So you are buying insurance, you're putting your goods on the road, GIT, and nothing happens. I mean, that peace of mind is there for you. But suppose something happens. So you buy a car that is worth 10 million naira, the rate is 5%. And insurance will come in and pay you 10 million naira. Meanwhile, your premium is just 500,000 naira. So the question people need to ask is the 19.5 million extra that's being paid, where is this money coming from? It's coming from that pool of fund that everybody has contributed in. So that's the way insurance works. I always say it's about pulling funds together. It's about giving people peace of mind. I mean, if I anytime I drive my car on the road, of course, I'm not going to be very careless. But at least I know that if anything, if one crazy guy, like what did you say the other time, hits me on the road, I know insurance will come in and pay. Because first, they will establish there was no negligence on my part. Secondly, I've paid my premium. Then everything, and insurance has even changed from what people know in the past. Now, the competition in insurance is more about who pays claims faster than the other party. So it's very important we talk about. I think that's the only question I could remember. If there's anyone I can chip in.
Well, I think there was an issue about the investment aspect of insurance. So somebody was asking something about life insurance, for example, annuities and so on and so forth.
Yeah. Well, I was in Abuja last week and somebody asked the same question. I think I was in Kano. Somebody asked the same question. It's truly for general business that is usually annual contracts. It's easy for us. We invest in the short-term instruments, TBOs, 82 days, 182 days, or there 92 days, 182 days, But for life is a bit difficult because they have long gestation policies. So somebody that is just retiring now at the age of, let's say, 60 now, you want to the actuary will calculate that will live for the next 20 years. So with that fund they are taking from him, you have to invest widely. But with this spiraling inflation, how do you mitigate against that? So people just come with a bouquet of investments. Some short term, watch the trend. Sometimes go into euro bonds, buy long-term euro bonds, try to hedge inflation. But it's a very difficult situation for all insurance companies when it comes to annuity, because imagine if you promise somebody a client 10%, or let's say 15%. Now you see inflation that is about 26.72%. So the inflation has already eroded the interest you're giving that guy. So invariably you are funding the payout from your own money. So it's a very difficult situation for insurance company, but so most insurers have to engage a financial consultant to advise them on how to invest the fund. But it's a real threat. And that's why we're optimistic that the economy will go back to the usual place and then things will balance out. But it's a real threat to insurance company. I haven't given commitment to your insured, then you're obliged to pay their money until either they die or that's just the way it works.
Right. Thank you so much. Clearly, the macro situation has made business a lot more difficult for not just the people that are buying the insurance, but even the insurance companies that are providing the service. But hopefully we can wade through the challenges. There's another question here. How do you intend to differentiate between self-inflicted disasters or occurrence and unforeseen circumstances in the case of accidents, theft, and others? Also, what is the justification for me to go for insurance rather than investing in the market? So, in a way, Olamide, we've brought you into the panel. So you are also we're happy to have you take some of these questions. But maybe Tunde, you can speak to this to some extent, the trade-off between insurance and investing. Do you want to speak to that?
Yeah, I think it's similar to a previous question that was asked about maybe the savings, right? And I think it's really a timing difference thing. It's would you have invested enough to meet the risk that you're trying to cover? So let me use your example. For now, auto insurance is 5%, right? Let's assume you're saving that 500K every month. At the middle of the year, after 6 months, you have just 3 million, right? Except your investment is giving you, I don't know, 300% a year. If anything happens to that car, your savings / investment won't be able to cover it. So it's I guess it's a trade-off between mitigating the risk now and then waiting to accumulate all the funds that might eventually should I say mitigate that risk. What it means is that at every point in time you want to have, or what that is suggesting is that you want to have cash or investment equal to all your assets at every point in time. I mean, that is possible, but I think it'd be very, very, very difficult for the majority of people. But I think is that really timing difference around saving and investing to the time you have enough cash to cover the whole risk?
Yes, and thank you for that.
Wally, do you mind if I speak to that as well?
Sure, go ahead, please.
So, you know, we gathered here to talk about creating wealth, preserving wealth. See, I don't want to be harsh, but I'm going to say it. It is extremely, extremely dangerous and possibly reckless or stupid to use savings as an insurance. When you work in your life or you build business, you want to build wealth. You want to build it enough that you can even pass on to your generation. Imagine using your savings is like every time you dig a hole, something covers it up. You mentioned, so after 1 year, you saved as an individual, you have savings of probably 5 million. And then something happens to you and everything goes. Yes, you actually covered it. You got a new car, you got a new thing, but you are back to ground zero. It's like running up the hill, running up something up the hill, and it rolls back. It's a very worst way to live one's life. So let's add it at the back of our mind. It's the very worst thing you can do to yourself to use your savings as insurance. Insurance, like Yemisi said, if you are a good person, you can drag Olamide and force him to give you, for example, maybe cash back or reduce your premium for subsequent years if nothing bad happens to you, because his actuaries will also calculate that you are not a risky human being, you won't carry into trouble. But never, ever, ever use your savings for insurance. It's the worst form of financial recklessness that anybody can do.
Right. Thank you so much for sharing that, what I would describe as financial intelligence, because I guess people, it's all about stepping back to think about what exactly you are doing and how you react to that eventuality when it does happen. If you had bought insurance compared to if you hadn't bought insurance, how does that, one, perhaps influence your quality of life or the status of your business at the time of that event? And then even going forward, how has it changed where you are? Like you said, it can potentially bring you back to ground zero again. So I think these are some of the considerations that should really make people begin to see insurance as not just a mitigant, but actually an investment that potentially protects other investments that you are making, including your savings. So thank you so much for that. All right.
So, well, let me just chip in a bit.
Yes, please.
I think is a question that has been asked a couple of times, and it stems from the wrong notion about the cost of insurance. So I attended, I think it was our customers week last month or so, that similar question was asked, and I said, if you have a building that is worth 100 million naira, are you going to set aside 100 million naira savings to secure the building? Now, what is the cost of insurance for that building? 0.25 max, 250,000 naira. So for 250,000 naira that you're going to pay the insurance company, you secure your building of 100 million naira. Now, insurance is, when people hear 100 million naira sum insured or value of the building, the misconception is the premium is going to be in the range of like 10 million naira. No. Like I said, it's about a lot of large numbers. By the time you pull a lot of homogeneous units into that pool of funds, it reduces the cost of insurance that each person will pay. So that's why when people say savings, there are two opposite views. I mean, savings does not even come into it. It borders on recklessness, like what they said is, okay, so you have a bidding 100 million naira, you set aside 50 million naira to pay for damages, when you could have used just 250,000 naira to secure that building. It's as simple as that. Same with other lines of business. I mean, professional indemnity, you're professional, I want to do a contract, you're either a financial consultant, you're a medical doctor, and someone said, go and get professional indemnity policy for let's say 100 million naira. The premium is just between 0.5 to 1%, between 500,000 to 1 million naira. So sometimes it's good for us to break down the figures so people will understand that insurance is actually cheap. Like what they just said, just about financial literacy that is there to pick up in the country.
Right. Thank you very much. Thank you so much for that question, for that comment. We have really, really, in terms of the time allotted for the webinar, I think we are coming to the end of that. So perhaps I may begin to have to round up now. But maybe one last reaction from you, Olamide, to this point about self-inflicted disasters and unforeseen occurrences? I don't think anyone has spoken to that enough.
Okay, that's a very good question. So in insurance, we try to ensure there is impartiality when setting claims. So if a claim occur, that's why we have loss adjusters. Loss adjusters, insurance space, you have the insurance company, you have brokers that places the business, you have loss adjusters that are independent set of people. So we call them the adjusters, and their own loss adjuster, their own work or claim assessor, whether for motor, and their own work is well cut out for them. You get the brief from the insurance company, they go and meet the insured, and then they will now investigate. If they're able to establish there was a fortuitous event, as in accidental in nature, the insured is rest assured that will get his money. But if they're able to establish, just like what they said the other time, somebody cooking in his sitting room, that's intentional act. Of course, everybody should know the end effect of that there has to get bought. So we've seen cases where people intentionally set their warehouses on fire so that they could get money from insurance company, or they get to one isolated place, set their own car on fire. So when loss adjuster or risk assessor goes there to these places and check, and they confirm that those are intentional acts, whether it's arson or whatever it is, then insurance will repudiate claim. So sometimes when you see in the social media, oh, insurance company did not do this, not do that, they must have done their own work very well to realize that these are not valid claims. And like I said, when you have a pool and people are contributing equitably into that pool, and you have some set of people that contributed, but they want to commit fraudulent acts to take money from that pool, you are doing disservice to the people that have contributed into that pool. So that's why insurance companies need to even protect the policyholders by ensuring that they carry out due diligence in ensuring all those claims, only valid claims are paid. Those fraudulent ones or intentional acts or asking whatever it is, then insurance company will repudiate. That's the way it works.
Thank you very much. Thank you very much. So it is an industry that has checks and balances. And while the person buying the protection doesn't want to be defrauded, likewise, the insurance company does not want to be defrauded. So the rules of engagement are set in the policy. As long as you abide by those rules, and with the changes that we're seeing in the market today in Nigeria, I think there's more and more assurance that the insurance companies will do their bit whenever there is a claim. All right. I think on that note, I really would like to say thank you so much to all our panelists. I think at this point we'll round up the panel session. We do still have a couple of questions, but I think we've been able to touch some of the basic and more fundamental questions that have come up. And so on that note, I want to say thank you again to all our speakers, and I would like to now yield to Uche Okaronolu, who would be delivering some closing remarks and thanks. Uche, it's over to you.
Yes, thank you, Wale, for what has been a wonderful session. And ladies and gentlemen, my name is Uche at the Bank Assurance Coronation Insurance. I believe we've been enriched by the session today, and clearly a lot of the nuggets, a lot of the points that was raised by the keynote speaker and also the panelists and our MD, Olamide, has been eventful. And again, I think they can help us with informed decision of how to, navigate through the financial engagements with our banks or our insurance company or our business partners. Again, it's a wonderful session. I took down a lot of notes right from when Wally started, and also Olamide's remark, and then the keynote speaker. And again, there's one thing the keynote speaker said that we must have experienced in Nigeria, Shege Promax. Clearly, a whole lot of stuff have gone down in the country. The economic situation has made it worse. Almost everything is up. Exchange rates, inflation rates, food inflation is up. Did you mention something about acquisition costs? And so the question is, if you know that acquisition cost is too high, it just makes a lot of sense to do insurance to cover those aspects. Because when claim happens, who will be there to help you out? It has to be an insurance company. And I like the fact that that was buttressed in very main times throughout the course of the session. And I thank everyone for joining. And I'm hoping that in in time to come, we will have people who will engage you to see how Coronation can provide for the perspective of how to improve your life. And so I want to thank the keynote speaker, Deji, a former colleague from Access Bank, also Coronation before he left us last year, and now he's the founder and CEO of Land Square. So Deji, thank you for a wonderful presentation. I like all the nuggets you brought in. Clearly, I like the part you played in, taking it from the point where insurance is important, right? Talking about insurance is key to creating wealth. It also makes you alive when the facts of life hit you. I also like the parts where you also said is the oxygen that gives life. Also, there's a whole lot of positives you can take from having insurance. I also like the part of where you also presented the responsibilities of all the stakeholders within the industry. As players within the industry, we have to ensure that we have trust. If you lose that trust in any business, it becomes extremely difficult to get your customer back on play. And so again, we have a responsibility to play as key stakeholders within the industry to ensure that we begin to tell stories that can draw customers to our side. We begin to show them that this is what will happen to you if you don't have insurance in place. And I know Nigerians like to see things, right, and feel it. So once you show them that this is the benefit of insurance, I know a lot of them will, stay tuned and try to, take on those policies as soon as they can. So I also want to thank the panelists, even though at the point they had to join Olamide to join the panel. So Babatunde Akin, the CEO of Skymog Engine, thank you for your insight. I like the fact how you brought into your job and the role you play in the lending industry. Unfortunately, Yemisi had gone. I saw her chat. She had to go for another very important meeting, but thank her for also sharing her life experience, with the HMO bit, and also how she has been able to embed insurance in all our engagement with SMEs and MSMEs. So again, Wole, my very good friend, my brother, I've known Wole all my adult life, and Wole always surprises me the way he handles moderating, so easy and so flawless. Thank you for what you do. We see you. We're learning from you as always. And thank you for a good job and for making sure this session is successful. And then finally, to Olamide. Olamide, I have a lot to say, but I won't share all the nuggets here. I won't share all the episodes. But Olamide is leading a wonderful financial entity, which the group I lead is part of it, Bank Assurance, collaborate with Access Bank. So again, in every session I find myself, I always tell people that in the Yoruba adage, I'm not a Yoruba man, but I'll try to say it in the proper way. There's a whole lot of stuff we have in place for customers, even our partners. We're currently one of the biggest partnership as far as insurance is concerned, work with Access Bank, and that's to Bank Assurance, right? And that's because we've been able to listen to, our customers, our partners, in how to make these services accessible to them. And so again, I want to thank everybody, the panelists, the keynote speaker, the moderator, and everybody that was part of this session. It was a wonderful session, and I picked up a lot of things. So the next section is what next? And I know that Wole, Babatunde, Olamide, and everybody who had one or two comments has talked about what technology we have in place for us. And so we're in a good place. We have an entity who listens to people. We have an entity who's open to collaborating with partners to ensure that we're making sure it's accessible. So on behalf of everybody, on behalf of the executive management of Coronation, and also my colleagues who are listening in, and also the attendees, I think thank you all for making today a wonderful session. And so again, I'm sure that my colleagues will be reaching out to attendees at one point to see if there are opportunities for us to co-create products that can be of value to everybody concerned. So thank you everyone for listening in. So Wole, I'm out. Thank you.
Thank you very much, Uche. It's always great to connect with you as well. And thank you again to everyone for being part of this. If you take a look at the chat field down, there is contact information at Coronation Merchant Bank. Coronation, my apologies, Coronation Insurance. I deal with banks so often. My apologies. Yes, and please make the most of those connections. We've shared quite a lot today, and I have no doubt that there would be one factor of your life or your business that you can see clearly requires the risk mitigation that insurance brings. And while things are not perfect, it certainly makes financial sense. I think Deji has already made that point to us today. Savings is not the way. It does not fix things in the best possible way. It makes more sense quite often to buy insurance. So I do encourage everyone to please contact Uche, and we look forward to seeing how Coronation can support you going forward. On that note, I want to say thank you to everyone, and we look forward to having you at the next event.
Thank you, Wally. Thank you, Deji. Thank you, Babatunde. Appreciate it.
Yes.
Thank you, everyone. Have a lovely day.
Turn up the speakers. It's DJ Cypher Lee in the